Welcome to the Deep Dive. Today, we're diving into the world of long-term U.S. Treasury bonds.
Ooh, interesting.
We're using the prospectus for the iShares 20-plus year Treasury Bond ETF.
You mean TLT?
Yeah, TLT, exactly.
Dated June 28th, 2024.
Right.
That's a great choice.
It's packed with information.
Yeah, it is.
We'll break down what this ETF is, how it works, and what it means for you as an investor.
Sounds good.
So TLT aims to track the performance of the icy U.S. Treasury 20-plus year bond index.
Which is a mouthful.
It is. So what does that actually mean for someone who invests in it?
Well, basically, your investment goes up when the index goes up.
Okay.
And vice versa.
So if the index goes down, your investment goes down.
Yep.
Got it.
So you're really hitching your wagon to the performance of that index.
Okay. So no need to worry about some fund manager picking winners and losers.
No, not at all.
It's all about tracking the index.
Right. And this index is all U.S. Treasury bonds that mature in 20 years or more.
Okay. So pretty long term.
Very long term.
Got it.
And as of February 29th, 2024, there were 40 different bond issues in that index.
40.
Uh-huh.
That's a lot.
It is.
How does TLT actually track that? Does it buy every single bond?
Not exactly. That's where the representative sampling strategy comes in.
Representative sampling.
Yeah, it holds a carefully chosen selection of bonds.
From the index.
Yeah, to try to match the index performance as closely as possible.
So it's like a miniature version of the index
Right.
living inside of the ETF.
Yep.
What's the benefit of doing that? Like, why not just buy every single bond?
Well, it can lower your costs
Oh, okay.
compared to a fund that tries to hold every single bond.
So that means more money in your pocket.
Exactly.
Always a good thing.
Definitely.
Speaking of costs, what kind of fees and expenses does TLT have?
It has an annual operating expense of 0.15%.
Okay.
That includes the management fee, but no distribution fees.
Okay, so that's good news.
Yeah.
For anyone who wants to know what that means for their wallet, the prospectus has an example.
Oh, perfect.
It says if you assume a 5% return,
Oh.
a $10,000 investment would mean about $15 in fees the first year.
Okay.
Over 10 years, you're looking at about $192 in fees.
Which isn't bad.
But of course, that's not including brokerage commissions or transaction costs.
Right. Those are separate.
There's also something called portfolio turnover to think about.
Which is basically how often the ETF buys and sells securities.
Oh, okay.
TLT's turnover rate was 23% last year.
23%. Is that high or is that low?
For a bond ETF like this, it's on the lower end.
Okay.
Remember, we're dealing with long-term bonds here.
Okay.
Not something you'd be trading in and out of frequently.
Right, so more of a buy and hold strategy.
Yeah, which could be good if you're after a stable long-term investment.
Okay, that makes sense.
Mm-mm.
Now let's talk about risk.
The big R word.
U.S. Treasury bonds are seen as pretty safe.
Yeah, generally.
But of course, every investment has risks.
Always.
So what should we be thinking about with TLT?
The biggest risk for a fund like this is interest rate risk.
Oh.
When interest rates go up, bond prices usually go down, and vice versa.
Right.
And because TLT focuses on long-term bonds, it can be hit harder by those swings in interest rates.
So if rates go up, the value of TLT could drop, at least in the short term.
It could.
Got it. But why are long-term bonds so sensitive to these interest rate shifts?
Well, let's say you buy a 20-year bond today with a 5% interest rate.
Okay.
Then interest rates jump to 6% tomorrow.
Ooh, ouch.
Suddenly your bond doesn't look so hot.
Right, you're missing out on a better deal.
Exactly.
So people wouldn't want to buy your bond at the original price?
Nope, and the price goes down.
That makes sense.
That's interest rate risk in a nutshell.
Okay, interest rate risk, that's a big one to watch.
It is.
What other risks are there with TLT?
Well, there's always market risk,
Okay,
both short-term and long-term.
okay.
Things like unexpected inflation or an economic slowdown.
Right, that could affect even U.S. Treasury bonds.
It could.
So what about the prospectus?
It mentions a lot of other potential risks. Cybersecurity risks,
Mm-hmm.
what they call index-related risk.
Index-related risk, what is that?
It means there's a tiny chance, but still a chance, that the index TLT tracks could have some errors in its calculations.
Okay, I see.
Or, unexpected changes.
So even if TLT perfectly matches the index, if there are problems with the index.
It could cause problems for the ETF.
Got it.
It's a lot to think about when it comes to risk with TLT.
It is. There's a lot going on there.
Yeah,
But risk and reward often go together, right?
they do.
So let's see what kind of returns we're talking about with TLT.
Yeah, time to see what the potential rewards might be.
Break out the champagne or brace for impact.
Well, before we get too excited,
Okay.
we have to remember that past performance
is not a guarantee of future returns.
Exactly.
That's the golden rule of investing.
Is.
But I'm still curious, what's the track record for TLT?
Over the past 10 years, the average annual return was 2.13%.
Okay.
Before taxes, of course.
Before taxes, 2.13%.
Which is pretty close to the 2.21% return of the underlying index during the same period.
So TLT seems to be doing a good job of tracking its target.
It does.
Which is what we want to see.
Yeah.
But are there any interesting details hiding within those average returns?
Oh, definitely.
Need any big wins or losses?
Remember those interest rate swings we talked about? Well, they can cause some big fluctuations.
Okay.
TLT's best calendar quarter was Q1 of 2020.
Okay.
With a gain of 22.42%.
Wow, that's huge.
It is. But then, just a year later, Q1 of 2021.
What happened?
The worst quarter.
How bad?
A loss of 13.98%.
Ooh, so it goes both ways.
It does. It can be pretty volatile.
Even though it's based on those U.S. Treasury bonds?
It can be, especially when there are unexpected events or changes in interest rates.
So you really got to stay on top of things with this one.
You do, but that volatility can also create opportunities.
For people who know what they're doing.
Exactly.
So not exactly a set it and forget it kind of investment.
Not really.
You need to be aware of what's happening in the market.
For sure.
Okay, let's move on to the people behind the curtain.
The wizards of TLT.
Yeah, the portfolio managers. Who are they?
TLT is managed by James Morrow and Karen Uyehara.
Okay.
James has been with the fund since 2011.
A long time.
And Karen joined in 2021.
Okay.
They both have lots of experience.
That's always reassuring.
It is. Especially when we're talking about something as potentially volatile as TLT.
Right.
Now, on to everyone's favorite topic, taxes.
Ugh, taxes. I was hoping we could avoid that.
Well, we can't avoid them entirely.
No.
The good news is we don't have to get into the nitty-gritty of tax law here.
Okay, good.
The key point is that any distributions you receive from TLT, whether from dividends or capital gains,
are potentially taxable.
Exactly.
Unless, of course, you're investing through a tax-advantaged account.
Like a 401k or an IRA.
Right.
Then you're good.
But if you're investing in a regular brokerage account,
you need to think about those tax implications.
Okay, so probably best to talk to a tax pro.
Absolutely.
Before making any big decisions.
Definitely.
Now, for something a little more technical, but still really important.
Hit me with it.
The role of authorized participants.
Sounds official.
It does, right.
Like a secret society?
Kind of, but what are they?
They're specialized entities.
Okay.
That play a crucial role in how TLT works.
Okay, I'm listening.
Think about how you buy and sell shares of TLT. You do it on the secondary market, right?
Through a broker.
Yeah, right. But there's another layer going on behind the scenes.
What's that?
The creation and redemption of TLT shares.
In large blocks.
Exactly. Those blocks are called creation units.
Okay.
And that's where these authorized participants come in.
They're like wholesalers dealing in bulk orders.
Kind of.
So they have some special access or something?
They do. They have agreements with the fund.
What kind of agreements?
Agreements that let them create and redeem these large blocks of shares.
Okay, so what does that do?
It helps keep TLT's price close to the actual value of its assets.
Which is also known as the NAV?
You got it.
So they're like a stabilizing force.
Yeah, they make sure that TLT doesn't stray too far from its true value.
That's pretty important for everyday investors like me.
It is.
So the price I see when I'm buying or selling
should reflect the actual value of the bonds.
Okay, that makes sense.
Mm-hmm.
Wow, we've covered a lot today, from fees to portfolio managers to these authorized participants.
Yeah.
Where do we go from here?
Well, now that we understand what TLT is, how it works, we can think about what it could mean for you as an investor.
Like the benefits and drawbacks.
Yeah.
And how it could fit into a bigger investment strategy.
Exactly.
Perfect. We'll tackle all that in the next part of our deep dive.
It sounds like a plan.
Don't go anywhere. We'll be right back after a quick word from our sponsor. Welcome back to the deep dive.
We're ready to keep going.
We've been unpacking TLT, the iShares 20-plus year Treasury Bond ETF. Now it's time to see how it fits into your investment picture.
Right. Time to connect the dots.
We've analyzed it, but how do we actually use this information?
Good question.
Where do we start?
Well, first, remember, TLT gives you targeted exposure to long-term U.S. Treasury bonds.
Okay.
It's not a broad market ETF. It's very specific.
So it's for investors who really want that particular type of bond?
Exactly.
But is that good or bad? I guess it depends.
It does. It depends on your goals and your risk tolerance.
So how do you figure out if it's right for you?
You always start with your goals.
Investment goals.
Yep. What are you trying to achieve? Growth, income.
Or both.
Maybe both.
Growth would mean you want your investments to increase in value over time.
Right.
Income would be like regular payments, like dividends.
Exactly.
TLT, since it's a bond ETF.
Yeah, it has the potential to offer both.
But the balance between growth and income can change.
Oh, yeah. It can. It depends on a lot of factors.
Like interest rates, I bet.
Yep. Interest rates are always lurking.
Those pesky interest rates.
They drive bond prices, so we got to understand them.
Okay, so let's break it down. How do interest rates affect how TLT performs?
We talked about how when rates go up, bond prices tend to go down.
Yeah.
And vice versa.
Right, but TLT has those long-term bonds.
So it gets hit harder than an ETF with shorter-term bonds.
So if you're expecting rates to go way up soon,
TLT might not be the best bet.
especially if you want gains in the short term.
Right. But if you have a longer time horizon.
Like you're not planning on touching that money for a while.
Exactly.
You might be willing to wait out those short-term ups and downs.
Ride the waves.
Why would someone do that? Stick with TLT if they think it might lose value in the short term.
Well, think of it like this. Bonds are usually less risky than stocks.
Okay.
And U.S. Treasury bonds,
Backed by the U.S. government.
seen as a very safe investment.
Right, low risk.
So for some investors, that safety is more important than short-term gains.
Okay.
They want a haven for their money.
Makes sense, but there's also that word diversification.
That's a big one.
Everyone talks about diversification.
And then what does it actually mean?
Yeah, and how does it apply to TLT?
It's more than just a word. It's a really important idea.
Okay.
It means not putting all your eggs in one basket.
So spreading your investments around.
Exactly. Across different types of assets, industries, even countries.
Don't put all your eggs in one basket, got it. But how does TLT play into that?
TLT, because it's all about long-term U.S. Treasury bonds.
Okay.
It can balance out a portfolio that's heavy on stocks.
So even if it's not going gangbusters like the stock market sometimes.
It can smooth out the bumps in your portfolio.
Less volatility.
Yeah, that's appealing for some investors, especially those close to retirement.
So they're not as worried about chasing those big returns.
They want stability.
Right, they need that income.
Makes sense.
So we see how TLT can be useful in a diversified portfolio, but how much should you put in?
Is there a magic percentage?
Yeah, like 10%, 20%, what's the number?
Unfortunately, there's no easy answer.
Okay.
It really depends on your situation,
Okay.
your age, your goals, how much risk you like.
So it's tailored to
Wow.
your specific needs.
A younger investor might put less in.
Because they have more time.
Someone nearing retirement might want more.
Because they need stability.
Right.
So before diving into TLT,
Do your homework
really think about your goal
and your risk tolerance.
and how TLT fits into everything.
Don't just follow the crowd.
Make your own decision.
Be informed.
Remember, if you put $10,000 into TLT and hold it for 10 years,
Those fees we talked about.
assuming 5% growth, they'd take about $192.
So is that trade-off worth it for you?
It's something to think about.
It's about aligning your investments with your goals.
It's easy to get caught up in the hype,
Oh, yeah.
but you got to look at the numbers.
And think critically.
Here's another question to consider.
What is it?
How do you think those global events we talked about,
And economic trends.
yeah, how will they affect interest rates?
In the coming years.
And how would those changes affect bonds like those in TLT?
Good question. It makes you look beyond just the numbers.
It's the big picture.
Investing isn't just about spreadsheets.
It's about the real world.
Exactly.
Well, we've gone deep on TLT.
From fees and risks.
To portfolio managers and those authorized participants.
Yeah, we covered it all.
We even talked about how it could fit into an investment strategy.
But there's one more layer to explore.
What's that?
In the last part of our deep dive.
Ooh, I like this.
I'll zoom out even further.
The grand scheme of things.
We'll see how TLT plays into the entire bond market.
Can't wait.
It's going to be good.
Don't miss it. We'll be right back after a quick word from our sponsor.
Welcome back to the deep dive. We've spent this episode getting to know TLT, the iShares 20-plus year Treasury Bond ETF.
And now it's time to zoom out.
Yeah, look at the big picture.
See where it fits in the whole bond market.
Okay, so let's start with the basics.
Basics first.
What role does an ETF like TLT play in the bond market?
Well, the bond market is massive, right?
Huge.
All kinds of bonds, different risks, different maturities, different issuers.
It's not just one thing.
Not at all. It's a whole universe of debt.
Okay, and TLT is just one little piece of that.
Yeah, it gives investors a specific way to get into long-term U.S. Treasury bonds.
So if someone wants that specific type of bond,
TLT is a tool for that.
and because it's so focused,
Its performance is really tied to how that segment of the market is doing.
so if those bonds are doing well, TLT is probably doing well.
Most likely,
But if things go south,
TLT could suffer too.
which is why we got to understand what makes the bond market tick.
What drives those prices up and down?
It can't be random.
Definitely not. It's all sorts of things.
Give me some examples.
Interest rates set by central banks,
Okay.
inflation, economic forecasts, even geopolitics.
Wow, it's like a giant puzzle.
With all these pieces moving around.
And those pieces can shift in unpredictable ways.
Oh yeah, it can get volatile.
So you can't just focus on TLT itself,
You got to look at the bigger economic and political picture.
the whole world.
Exactly.
Give me an example. How could something happening across the globe affect TLT?
Let's say there's some big geopolitical event.
Like a war.
Could be a war or a big policy change in a major economy.
Okay, then what?
That creates uncertainty
In the markets?
everywhere, including the bond market.
So it's like a ripple effect.
Exactly. Something starts somewhere and the impact spreads.
And how would that ripple effect play out for TLT?
It could go different ways.
Okay.
Some investors might get scared and want safer assets.
Like U.S. Treasury bonds.
Exactly.
So more demand for TLT.
Which could push the price up.
But it could go the other way too, right?
It could.
What if everyone wants U.S. dollars?
That can push up U.S. interest rates
Which could hurt TLT.
because of that interest rate risk we talked about before.
Right. It's all connected.
It's a web.
So with TLT, you really got to think beyond the numbers.
You do. You got to understand the context.
The global stage.
The bigger forces at play.
Well, I think we've done a true deep dive here.
I agree.
We've learned about TLT, its pros, its cons, and how it all fits into the bond market.
A lot of information.
But hopefully you're feeling more informed now.
Ready to make smart decisions.
As always, keep learning, keep asking questions.
Do your research.
The more you know.
The better off you'll be.
Thanks for joining us on the deep dive.
Until next time.
Happy investing!